It's all individual investors. It's highly leveraged. The government's throwing money into it. They're pulling money out of it. They're putting money back into it. It's a big sales pitch for people to invest. No business capitalization happens in this market. It capitalizes virtually nothing. It's all government agency companies. By the way, the other issue with the Chinese stock market is the Chinese stock market is primarily industrial companies. China basically just plowed through and built everything ahead of all of this, and now they need to turn their economy around. So this stock market doesn't even represent what's actually happening in China. This is the GDP of China. As you can see, it's still around 6.5%. 6.5%. Anybody up for that? The United States is about 2%. God, those guys are really suffering, aren't they? 6.5%. Are you kidding me? Now, it used to be way up here, and then it collapsed and it came back, but look at where we are today. And this line, this is services. This is the big thing. We actually talked about this in the last meeting. This is what China has to do. They can no longer be a manufacturing giant. Labor costs are too high. They have massive overcapacity, absolutely massive overcapacity. They've got to get the consumers to start to consume. This economy is changing. It's changing very, very quickly. And when you try to change something quickly, you get backlash. It's what we talked about earlier. It's not what happens, it's the speed in which it happens. And this is happening too fast, which is why there's so much uncertainty. Here's manufacturing. It's not growing anymore. Overcapacity. So this is pretty interesting, China. Is that going to bleed through to the US? How about oil? So this is oil way back when, before anything. And then here's the 70s, the big run up. We probably remember this. Okay, we've had this run up here in the 2000s, back here in 150. I remember when oil went up to about 145, and we were very bearish on oil. And I remember everybody I talked to who thought oil was going to 200 went to China. It was the biggest mistake a strategist could do, was actually physically go there. Because they would go back and say, oh my God, you see all the cars. Price of that commodity has nothing to do with how many cars are in China specifically. It has to do with total worldwide demand versus supply. Here's something you need to know about oil. It's one of the most efficient commodities in the marketplace in terms of price. What screwed it up here was China's subsidized price. When it was 140, they were selling it at $40. China manipulated the market and took away the efficiency. This is efficiency and this is efficiency. Yes, right now we're at efficient pricing. The one thing about oil is when oil moves very quickly, when the price goes way up, what do producers do? They produce more. And what do we all do? We buy less. That's when we hear about alternatives. That's when we buy smaller cars. That's when Priuses are popular. When price goes down, all the producers collapse their supply and we use more. Just ask Ford and Chevy. They're selling SUVs and pickup trucks like crazy right now. And guess what? All those Chevy Volts and all the Priuses and all the things that the government really pressed hard about 4 years ago, it's not going so well. A lot of excess inventory. This move is just a dynamic move down from over 100 to 50. This is why. This is not a trader's issue. You hear that, oh, they're just trading it all over the place. It's not. It's supply and demand. This is demand. There's plenty of demand here. This is 2.6 million barrels a day. And here's who's eating it up. This is supply. Here's the problem. Look at the United States. Did you ever think you would see that? This is year-over-year growth in supply. The United States is huge. From 2009 to 2014, again, did you ever think you would hear this? We were 80% of the increase in oil supply. We were 80% in the increase in oil supply, the United States. And now we're looking at about a 40% decline in output. That's what we're going to be doing over the next year. Okay? This is why oil is priced where it is. This, by the way, this line is usage. This is rig counts in the US. Look at this. Look at this drop off. This is why oil is priced so efficiently. There's going to be a lot of pain, by the way, here. You don't want to be a leveraged oil producer that came into the game late.